Good day, traders. Stacey Burke from Stacey Burke Trading. I've been away traveling for a few weeks and just catching up with kids and family, and just took a few weeks off from posting videos. But today, just getting back to basics. And tonight we have the Bank of England. Last night was the Fed. Today I just want to talk about, again, I've received a ton of emails just looking for more sort of specifics, and I guess one of the most important things that I'm going to encourage all of you to do is to master the high and the low. And as each week starts, the high of the week and the low of the week are the most important areas for me. And again, if just looking at a chart, this pink line represents the beginning of the week. One of the things I always do is look at the most recent highs and lows as we head into the open, not only of the new week, but the new day. But I want you to think about some important things as the Monday starts to trade, especially if it's inside of the range of Friday, or if it takes out the low of Friday or the previous day. In that once that area has been triggered, other time frame traders will be involved in the market. And so obviously for end of day traders, the most obvious place that stops would probably be put is at the high of the previous day that you've traded the breakout on. But as the day evolves, you'll find that we have a high and a low put into place from that Asia session. We talked about consolidation and how that is a large time frame for accumulating orders and the accumulation phase, and and I tend to primarily focus on the London session and the New York session, but also number levels. Now there are some other charts that I may look at that will show some bias as the template unfolds for the week. Other people use different indicators, whatnot, but generally speaking, I'm looking to focus specifically at the highs and the lows and how the market trades when it gets to those levels. There are certain types of patterns that once they present will indicate that there are traders trapped and that the market has a high possibility of moving to the other side of the range, and in a lot of cases completing a measured move excuse me, of that geometry that it's just broken out of. Now we know that in a large majority of cases 80% of breakouts fail, but when you focus at specific times of the day, primarily the market opens, there will often be a trap or a stop hunt or a false break, whatever you'd like to call it, before the real move takes place. And so often this can be challenging in live time, but again, focusing on keeping yourself outside of the middle of this range can often minimize your risk on a trade, excuse me, but also reduces the opportunity in a lot of cases for an asymmetrical risk reward in terms of 2, 3, 4, maybe 5 to 1 in terms of what you're risking on the trade to what the trade profit potential may reap. So again, as the week unfolds, we've talked about trying to identify up template, down template, and one of the simplest things that I tend to do is, to me, Monday is day 1, Tuesday is day 2, Wednesday is day 3. Now in this particular case, we can see the market came down Monday, Tuesday before it reversed back up into the Fed, and possibly has given us an M pattern up here as we head into the Bank of England tonight. But one of the things that's important is just looking at the market and saying day 1, day 2, day 3, midweek reversal. But we now have a range where the high of the week and the low of the week are in place. And so again, I'd be looking, as we've seen the market sell off twice up here, maybe evidence of selling up on that top of that range, or an opportunity to participate in a move back down towards where we may get a buying opportunity towards the low of the range. Now generally speaking, if we back this chart up, we can see that the market has been in a longer term downtrend. We saw 2.5 weeks of the market moving up and pulling back into that large move down in May and then consolidating and rolling over again. But again, as we go day to day in that Asia session, so this blue box, again, people have asked for the indicator. It's just iSessions. It's a free download. Those times are personally programmable, so some people have queried that the times don't match. I set the times myself to end at the Europe Open and start at the beginning of the day. When we get a large move, excuse me, such as this move yesterday that was well more than 50 pips before it reversed. Again, just looking at it, took out the low of the week or the low of the day first and reversed in the previous session with a strong movement back up into the range of Monday, and so I would therefore call this level 1 again, and I'm looking at level 2. So I'm expecting to see another push up into this top area, and depending on how the market handles that up here over the next couple of days, we may see a level 3 reversal back down towards the low of the week on Friday. But again, not saying it's going to do one or the other, but just day to day, I'm looking for how the market trades when it gets to the low of the Asian session or to a previous breakout level, and how it handles those levels when it gets there. If it breaks through and consolidates, I'll be looking for a continuation. If it tests a level and reverses, especially around numbers, again, we talked about one of the previous videos how the market handles trading around, institutions handle trading around numbers. Again, this is a sweet spots indicator. These are just every 25 pips. And again, just thinking in simple terms, the average daily range is approximately just over 100 pips on the pound yen, and we can see that the market covered just over 4.5 boxes of 25 pip range increments. So as we head into the Europe Open now, we do have an initial high and the low of the day, and as the market has profitable trades building up from these lower areas, and we've seen it test this area twice, I wouldn't be surprised to see the highs taken out after a stop hunt down low, one more drive to the top side, potentially a bit of volatility with the Bank of England, and then a reversal possibly on Friday. Again, this market could continue to rise and break through and move back up. But again, at this point, we'll just watch each day how it handles the low and the high of the day and how that trades as that market evolves. So hopefully that helps explain some things. To me, it's critical that you master the high and the low of each day. Just again, point some things out. Yesterday, in the early part of the session, the market made a new daily high, which again, we don't see a consolidation or pullback into the close. That means that end of day traders are in the market. And again, if the most obvious area that those stops were to be placed would have been down here if they're breakout traders. And again, as the market pulled back, past that 50 pip movement, it found support on the previous day's breakout, reversed again back to the numbers at double zeros, and moved right up to the next set of double zeros up here. And now we've had a 50 pip pullback, and we'll see how this 3650 level holds. We may indeed see a stop of another 25 pips down to the 3625 level. And again, at this point we see one push, two push, so I'm expecting maybe one more drive down to this 3625 area. So hopefully that provides some value for you traders. Again, just study these highs and lows, study the candle formations when these reversals have taken place outside of the box or outside of the highs and lows from the Asian session. Again, the daily template, we have a weekly high and a weekly low. As this market evolves and trades, especially on a Monday, this is the new weekly high. It takes out the weekly low to swing into Tuesday. We get a new weekly low taken out and reversed, and the market moved back up towards the weekly high after taking out a daily low. And these are sort of the little things you have to think about as the market evolves each day. So today we have a market that has yet to take out a previous day's high or low, and it also has not taken out a current daily high or daily low. So at this stage, until one of these levels are broken and how the candles form once it takes out these levels, I'll be sitting on the sidelines and letting the market break out and tell me where I should position myself, either with the breakout or a reversal pattern and a counter move back in the opposite direction. So stay disciplined, traders, stay focused. And just on that note, you can see that if these are 25 pip increment movements, that at any point, if you take a trade as a breakout or a reversal or anything else, usually one candle, 10 to 12 pips on the pound yen, maybe 15 maximum depending on your level of fill, should be your maximum risk, and often you're targeting 25, 50, maybe more in terms of your risk reward. So stay disciplined, traders, stay focused, keep getting better, and may the markets go with you.
Hi traders, it's Stacey Burke from Stacey Burke Trading. If you haven't done so, please head over to my website at staceyburketrading.com. I create updates on almost a daily basis, and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, the 7-Step Daily Routine for High Performance Traders. This is essential knowledge for all traders in all markets, and this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, stay disciplined, and may the markets go with you.